let's review a file that we recently closed in Long Island, and let's go through the details. This is what the property looks like. This is a 4 bedrooms, 3 bathrooms in Long Island. So it's fully renovated, right? And let's go through the stats. So the purchase price was $810,000. The client put down 10% down payment, which was $81,000. And their monthly liability was nearly $1,400, right? $1,378. This is your minimum payments on your credit cards or your student loans or car payments, child support, anything that you have to make on monthly basis. We would add that. It usually shows up on your credit report. On this file, there were 2 people on this file, and the credit scores that we use is going to be 743. So even if one person have 800, we always look at the worst credit score. So the second person had 743, and that's what we used. Collectively, household income was over $225,000. Both of the borrowers were in the medical field, and the property taxes were on the lower end in Long Island. We typically see on the higher end, and this was nearly $5,600 there. And home insurance, $1,200 there, okay? And the loan amount, the loan program that they used was conventional. Even though they had 743 credit scores, with this loan amount conventional, we just need 620 or more. The better your credit scores, the better interest rates you are being offered by different lenders. And even though they put down 10%, you can only put down 5% if you're going to live in that property, okay? And let's go through the CD. This is the actual CD that we're going to review. $810,000 was the sale price. The loan amount was $729,000. The interest rate that he received was 6.499, and the monthly principal and interest was $4,607. If you're a first-time home buyer, always make sure that you see no on this page here. Can this amount increase after closing? You always want to see no's here, okay? So because he put down less than 20%, there's going to be a mortgage insurance until that mortgage until he hits 20% equity there, okay? So you can see that the mortgage amount, your monthly mortgage amount will drop once your mortgage insurance is removed. And you also see an escrow amount here. What is this for? This is going to be anytime your property taxes are due or your home insurance is due, that it will come out from this escrow account. So think of you as like a savings account that your mortgage lender is managing when these things are due, okay? His total closing cost was $17,000, and we're going to give you a full breakdown of that, okay? So in section A here, you can see this is where you're comparing lender to lender, that this is your origination charges. How much you as a borrower, how much are you paying to the lender? So this client paid nearly $1,200 for the underwriting fees, right? No points, no other fees to the borrower. Then you see the services in section B. These are the services that you did not shop for, right? This is your appraisal fees, your credit report, nearly $730 there. In section C here, this is what you see that you did shop for. Your attorney ordered the title from the title company, and they're charging nearly $5,100 there, okay? Then is going to be your section E here, taxes and other government fees. This is what your government is charging for the county that you're buying the property in. So this one was nearly $6,700 there, okay? Section F here, these are your prepaids. This is what you already paid for before the closing. Was your home insurance, $1,276. Because now you have an escrow account set up, when that renewal time comes, it will be paid from your escrow account. Then you also have your prepaid interest and your property taxes, nearly $1,000 in prepaids, okay? Section G, this is your initial escrow account at the closing. So that same savings account that we are talking about, that is you're gonna put in around $500 each month towards that escrow account, is gonna start off with some amounts, right? So the bank says, hey, we're gonna use 3 months of your home insurance amount in there, and we're gonna put some property taxes of 2 months and village taxes of 5 months. So we're gonna start your escrow account with $1,100 there, okay? And it's gonna keep building with that $500 extra from your monthly payment. And when the time comes for your property taxes or home insurance, it will be paid from there, okay? Then you can see here that your closing cost total was $17,000. He already paid before the closing $1,800. He has $81,000 in down payment, and he already put on the contract, when he signed the contract, $40,000 there. So at the closing table, he has to bring in $57,000, okay? So if you want to go over any of your closing costs, or if you have any questions, please get in touch.